All right. Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2022 Investor Conference. My name is Robert Blum, Managing Partner of Lytham Partners. And during this webcast, we welcome S&W Seed Company, ticker symbol of SANW on the NASDAQ, and their Chief Executive Officer, Mr. Mark Wong. Today's discussion is going to be in a fireside chat-like format here. Before we begin, I just want to remind everyone that management is available for one-on-one meetings later this week. If you've not already signed up, you could send me an email. That's Blum, B-L-U-M, at lythampartners.com. Or you can visit the website at lythampartners.com/virtual, click on the one-on-one meeting request button, and we'll look to get you taken care of. So, Mark, welcome. Thank you for joining us today.
Thanks so much for having me, Robert.
All right. While I assume most people are familiar with you and your background, for those that may not be, give a little bit of an intro on yourself and your history in the seed market.
Thanks so much. It'd be a great pleasure. I just want everyone to know I've been blessed with the opportunity to have worked in this market for 45 years. This is my fourth company. My other three were also seed biotechnology companies. One was sold to Dow Chemical and two were sold to Monsanto over those 45 years. And I've basically been breeding proprietary seeds and selling those around the world to farmers for my whole career. Everything from vegetable seed to all of the field seed crops like corn, soybeans, and cotton. And so I came to S&W now 5 years ago and basically have rebuilt the company with a very experienced management team that I've brought into the company. And we have taken the traditional alfalfa and stevia businesses that S&W had before, and we've added to those product lines. I felt that the company was just too narrow in its focus. And so the main crop we've added is sorghum. And with sorghum has come one of our exciting traits, which we'll probably talk about later. And then we continue to sell alfalfa around the world. We've done some work with our stevia products. And maybe, Robert, we want to chat about that later. And, it's been an incredibly exciting opportunity to come to S&W as the CEO and sort of remake it in my vision. And I'm just really pleased to be able to talk to everybody today and give them some details of what that plan looks like.
Fantastic. Well, yeah, let's start with sorghum there, as you mentioned, and dive into that a little bit more. Over the last couple of years, you've sort of focused on this transformation of the company into a trait technology company. The lead trait within that is double team sorghum, as you mentioned here. Let's talk about that a little bit more. What does this mean for the company, and maybe we'll follow up with that on some market opportunities.
Okay, great. So sorghum is a grass like corn. And so it is really in the U.S. markets, which are the most sophisticated and highest proprietary markets in the world. It's a Western Corn Belt crop. So it goes from kind of the Mississippi to the Rocky Mountains. And why in that area? Because it's very water efficient and much more water efficient than corn. And yes, you get a little bit lower yield per acre in terms of bushels of sorghum versus bushels of corn, but your input costs are lower and your water requirements and therefore your costs are lower. So sorghum last year was a crop that made a big increase in acres. It's about 7.5 million acres in the US now. I have been in the sorghum business previously with one of my companies when the market 20 years ago was about 12 to 13 million acres. And so the obvious question is what's happened to all those acres? And what happened to them is Roundup Ready corn came in and replaced sorghum, because sorghum, Roundup Ready corn, Roundup Ready, for those of you who may know, is a combination of herbicide and a gene in the plant that allows you to spray Roundup over the top of the corn, and it kills all of the grass weeds that the corn is competing against. And there wasn't an equal product to that in sorghum. And so what we've done is we've created this double team product, and double team stands for the trait, the proprietary trait that we have embedded in the sorghum plus the herbicide that we're selling, which is a herbicide that we get from Adama, our big chemical manufacturer in China. And we basically can control grass, weeds, and sorghum by spraying over the top. So what that means is you just there's a gene embedded in the sorghum that allows you to take the chemical and wet the whole sorghum plant on, by going over the top of the field. You kill all the weeds, the grass weeds, and the sorghum kind of shakes it off and just goes, wow, I feel fine. And you get really good yields, and the farmers seem to be happy with it. We're in kind of our second year of sales and doing the big ramp up this coming year. And, our results from the field are really pretty spectacular. And it's kind of the talk of the sorghum industry as we sort of speak and get ready for spring planting here in the U.S.
So as you mentioned there, you're sort of in year one, transitioning into year two. What is sort of the market opportunity here from, you mentioned some acreage numbers here. Talk about the dynamics of that market here a little bit.
Sure. There's about 7.5 million acres of sorghum, and we think roughly that half of that will eventually contain our trait. So that's half of 7.5 million acres, and the sorghum acres could grow. So we're in a situation around the world where, because of the war in the Ukraine and crops, and there's also bad weather in Brazil. Crops have been relatively, based on history, yielding less than they have in the past. And so proprietary seed varieties are well sought after that have high yields, because the farmer is selling his bushels of corn or sorghum or whatever for very, very high prices, pretty much as high a price as ever has existed in agricultural history.
All right, let's come back to that topic there in the macro in just a moment here, but maybe transition to one of your other sort of crops here, Stevia. You entered into an agreement with Ingredion to supply the Stevia leaf. Maybe just sort of talk about that business model a little bit, how it may differ from sort of the alfalfa seed sales and the sorghum seed sales, and
Sure.
What the opportunity is there.
Yeah, thanks. So Stevia is a sweetener. It is a plant-based sweetener. It comes from originally Paraguay or Uruguay in the sort of valleys there. And it has very high sweetness content, so about 400 times the sweetness of sugar. And so a little bit goes a long way if you're making a drink like Pepsi or Coke, or you're making a baking product or that you want sweeter, like a muffin or something like that. And the beauty of Stevia is, because it's a non-sugar sweetener, it just tricks your tongue to taste sweet. People who have diabetes can eat it, and so that's been the big push in the marketplace, is to have a sweetness source for people with diabetes, and it tastes pretty good. And so, people who don't have diabetes but consume diet sodas and things like that, are eating more and more Stevia every year. The main market's in the U.S., so it's roughly $1 billion market in the U.S., another close to $1 billion, the rest of the world. And right now, all of the Stevia leaf, and that's where the sweetness is embedded by the plant in the leaf, all of the Stevia leaf is produced in China. And that's because of low labor costs. And so the Chinese plant the crop every year, and they harvest the leaves off, and then they extract the Stevia from the leaves, and they sell that around the world. And the biggest company that produces Chinese Stevia is Ingredion, who is now our partner. And so I think the obvious question is, so why are they our partner? Why are they interested? And what we've done is we've taken our proprietary breeding technology, and we have figured out how to grow Stevia on a per pound cost per leaf that competes with China. And so we've done that by making Stevia into not an annually planted crop, but a perennial crop. So our stevia is planted either in the spring or the fall, mainly in the southeastern United States. So the big states for us are Georgia, North and South Carolina. And we farm it. We have our farmers farm it for 3 years. So we leave the stevia plants in the ground, and we have developed, with the help of our farmers, a harvester that rips the leaves off but doesn't pull the plant out of the ground. And so we harvest the same plant for 3 years mechanically. We don't need people to pick the leaves like in China. And it reduces the cost to around the $2.50 per pound world market price that stevia leaf sells for today. And so that's a really positive thing for the stevia industry, because obviously everyone with all of the supply chain problems is very sensitive to where the crops are grown. So food security, not having it closer to the actual place where the stevia is going to be used, which is the U.S. market, and then having a supply chain that's really short, right? We're growing it in the Carolinas and Georgia, and that's where it's going to be sort of processed into the sweetened powder that then is sold to consumers.
And again, to just sort of finalize this point, the business model is sort of a circular type business model there, right? That's different than the others that you currently.
Yeah, that's a great point. And let me tell our viewers a little bit about that. So, the big thing in agriculture right now is having these circular product production ideas and products that are basically we buy the leaf from our farmers, and we sell the leaf in a back-to-back agreement to Ingredion, and then they process that into the sweetened white powder that you get in the little packets in a restaurant or something like that, and they sell it through their distribution to the U.S. consumer. And so, that's people like that model because it takes a lot of risk out of it takes certainly pricing risk out of the whole chain of producing something. Like I said, it's from a supply chain standpoint, you've shortened the production to consumer as short as it can be in agriculture, and you're doing it in the biggest market for stevia in the world, the U.S. market.
All right. Let's sort of transition to the macro a little bit there. And you mentioned Ukraine here a moment ago. Give us the update. What's kind of taking place? Commodity prices are clearly up. What does this mean for farmers? What does this mean for your business? And then I want to sort of follow that up in a moment, maybe on food security, but maybe talk a little bit about what you're sort of seeing on the ground here in a moment.
Yeah. So, not only do we have high prices, but we have the highest prices in history. And so, my comments, even with 45 years of viewing ag markets from, a very detailed basis to, a fairly what's happening in seed and what's happening in all of these major crops all around the world. We're seeing corn, soybean, wheat, sorghum, grain prices at the highest they've ever been. And so it's a very good market for farmers because they're obviously making a lot of money. They like to spend that money on a new tractor or on the best seeds. So one thing for people to understand is that the ag markets are all commodity markets, right? So at the low end of a commodity market, when prices are low, the farmer's just trying to survive. He's trying to reduce his input costs. He's trying to make sure that he can produce a crop, and he is just holding on for the good years. And the good years are now. And so with these record commodity prices, the farmer sort of changes his philosophy. He's done this before. He's probably been farming for, decades or more. And he knows that in a high commodity price market, that every additional bushel that he produces is going to make him a profit. So he's willing to spend money on better seed, on more fertilizer application per acre, on watching his weed problems and his insect issues if insects are attacking his crop to make sure that he gets the maximum amount of bushels per acre, because he knows that every bushel is going to make him money. And that's the market that we're in now. That's the macro market, as you have asked the question, that it's a new place for us to be, right? So it's hard to really know what the net effect of all that's going to be, but clearly farmers have more money, and when there's more money in the system, usually that's good news for all the input suppliers like seed companies like S&W, as well as the ag chem suppliers and the fertilizer suppliers. So it's a good time to be in agriculture, that's for sure.
Right. You and I over the last year or so, we even had a panel discussing this, talking about food security, the agricultural supply chain. I think there was some foresight to many of the issues I think that have cropped up, especially as it relates to the situation in Ukraine. Shipping issues preceding that, and even currently occurring. Just kind of remind us of what sort of the market looks like, and some of the issues that are out there right now, and how you guys are going about addressing it.
Right. So, I'm not a smart enough sort of economist to understand really why these supply chain issues sort of happened, but clearly they've been in the news for every industry, and ag is included in that. So, for us, we have a relatively low value product per pound when you compare to sort of computer chips as a sort of the example. And so having freight costs be 5 times they were before COVID hit us a couple of years ago, and now, with all of the additional labor issues, there's just seemingly not enough people to unload ships and be truck drivers and all of those kind of jobs. It's just a very daunting sort of problem. And then, you add to that seed companies, basically, we're tied to agriculture too. Our production plant is the farmer's field. We plant in the spring and we harvest in the fall, and then we have to get that seed that we harvest in the fall all cleaned and put in bags and sent to our customers around the world. And if the customer is in the northern hemisphere and it's southern hemisphere production, as it is with our alfalfa, then we have like 5 months to get it to them. And that used to be plenty of time, because it takes maybe 2 or 3 months to clean the seed and get it bagged up. But now, with the situation in world markets and delivery issues, it's really, for us, not trucks so much, but the containers that have to go over on the water. And so our alfalfa seed is produced mainly in Australia, but some also in the US, and that has to go to the Middle East. And we don't have a whole lot of months to make that happen before the farmer's planting date in the Middle East. And so, we've had a couple of tough years working hard to make sure those customers got our seed.
All right. Maybe let's transition a little bit to just the competition, the markets in general here. You've always talked about being focused on middle market crops, right? Alfalfa, sorghum, et cetera. Who is it that you're competing with in these markets? And when you look at the landscape or the mosaic of the various seed companies out there, where does S&W fit?
Yeah. So the industry's had huge consolidation in the 45 years that I've been a participant, and pretty much all that time as a CEO of various companies. I've had, 6 ag companies, and 4 of them were seed biotech companies, including S&W. And I can sort of say that the industry in its consolidation, and people should understand that it's kind of now 4 big companies from 6, 3 or 4 years ago. So it's, in my view, the last consolidation. But those 4 companies control about 75% of all of the professionally grown seed in the world. And, they're hugely powerful. The assets that they have are hugely valuable. And so they make most of their money in corn, soybeans, and cotton. And so those crops require $1 billion of investment to even make an attempt at a market share. And, we're just, as a small company, we don't have the ability to raise that kind of capital, nor would investors have the wherewithal to accept the risk that it would be to compete against those big four now. And so we, from the beginning, when I came to S&W, have focused on what we call the middle market crops. So basically, those are the big acreage crops in the world that are not corn, soybeans, and cotton. That's the easy way for people to understand that, for investors to understand that. And, so sorghum's one of our big crops. I'll just talk about that again for a couple of minutes. In the U.S., it's a $7.5 million crop, million acre crop. It has been, as I said, a 12 to 13 million acre crop. But the worldwide acreage is between 50 and 75 million acres. And so sorghum is a much more important source of food around the world than it is in the U.S. In the U.S., it's used to make ethanol, and it's used as an animal feed. But in other parts of the world, Africa, Asia, it's used as a human grain, kind of like wheat is, to make breads and things like that. And so it's direct human consumption that gets the acres up around the world. And that's what gets us excited, of course, is offering our improved proprietary varieties and hybrids in the U.S. And then now with this trait double team, and then taking those overseas to these much bigger markets around the world.
I guess when we think about the milestones, as we kind of wrap things here, when we look at 2022 here, I know your fiscal year and your calendar year are different, but maybe just give investors what they should be thinking about the goals and objectives and milestones here as we look out to the rest of the year.
Yeah, I mean, we've given guidance of sales of $80 to $85 million this year. We think that guidance is still accurate. I'm not saying it's an easy guidance to make. We're pushing on these supply chain issues. So it's not that we don't have the demand, right? There's a lot of acres. We just said before that commodity prices were high. We have a lot of demand. It's getting the seeds to the farmers in time around the world. That's the issue for us, not what our order book looks like. And that's a frustrating thing. Usually in the agriculture and the seed industry, it's your order book, but the order books are strong for pretty much lots of companies, but for us in particular, I think because of the proprietariness of our products, I mean, we have had to invest money in these breeding programs, and so we have had historic losses at the company, but those losses now have built a proprietary product line that we think is going to take us to profitability here in the next year or two. And, that's a wonderful place to be. I don't like taking dilution for my investors. I understand that return. I've been doing this a long, long time, and I understand that return is affected by how many shares are out there, and not just the price, obviously, but how many shares in total. And you don't want to raise money, and we try to be frugal in how we run the company, but it does take money to invest in these breeding programs to create these proprietary products. So we think we're on the edge of finally harvesting, to make a pun here, of all of our investment in our seed programs. And, that doesn't mean that we won't be focusing the company more. That's always important. Get the most out of every dollar that you spend. Certainly, it means that we're very intent on profitability as soon as it's possible. And we understand that investors want to see that from us. And, we're happy with these markets. Like I said, farmers are all salivating over planting their spring crops this year because prices are so good. It's a great time to be out in the turn row for our sales reps to be talking to farmers. Everybody's happy and excited about the opportunities, and that's really a wonderful place to be. And now it's up to us to harvest those opportunities and convert those to a profitable company.
All right, perfect. Anything else maybe before we end the discussion here?
No, I think you, as usual, you've been working with us for a long, long time, and you asked some great questions. You know the company well. Hopefully, if people are interested in us and have some more detailed questions, they'll sign up for one of the one-on-one sessions, and then we'd be obviously happy to dig into whatever they want.
Fantastic. All right, Mark. Well, we'll leave it there. Thank you as always for the time today. Greatly appreciate it. As Mark just said here, to anyone that has not already signed up for a one-on-one meeting, you can reach out to me, send me an email, Blum, B-L-U-M, at lythampartners.com, or again, visit the website at lythampartners.com/virtual. There'll be a meeting request button on there, and we'll look to get you taken care of. So we hope you enjoy the conference. Mark, again, thank you very much.
You're welcome, and thank you, Robert.